Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is testing and rejecting to the upside a quite strong historical support and demand area. From here, in fact, multiple rejections to the upside have been created. As you can see, every single time that the market tested its zone in the past, it got rejected to the upside quite a bit. We had only one break below that zone, and since then, every time the market tested its zone again, it rejected it to the upside. And right now, the market is testing the exact same zone, already started rejecting it to the upside. So there is definitely the possibility of seeing more bullish price action being created away from this zone, as already happened in the past when the market was testing this exact same area. Now, let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, if we drop down, what we can notice is that we have a market which is currently in a quite straightforward and clear uptrend. We can see that every single time that the market created a move, it was either creating a higher high or a higher low starting from here. We can see the first impulse to the upside, correction, higher high, higher low, higher high, higher low, and now just now another higher high, which is essentially the definition of an uptrend, right? When you see an uptrend, you want to see a series of higher highs and higher lows being created every time. Now, at this point, the next logical step would be for the market to create yet another higher low and then the next higher high. So essentially to complete this weekly impulse correction and impulse pattern to the upside. To do that, we have to identify the structure. If we want to try to identify where we have good probabilities of seeing that higher low being created. Now, in this case, the previous resistance turned support is this level here. This is the previous resistance from which this move to the downside was created, which is now turned support here. Now, since we have an impulse and already the start of a correction, we can also try to measure this correction by taking our Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have the 0.32 and 50% retracements lining up exactly with this previous resistance turn support area. And this creates confluence of support inside of this zone because we have multiple layers of support lining up in the same area of price, which increases the probabilities of seeing institutional longing inside of this zone. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. For now, let's keep this in mind and drop down on the daily time frame. Now, if we go down on the daily, what we can notice is that we have a market which at the moment has found some resistance at this zone and seems to be heading towards that support and confluence of support that we have previously identified, which is around this area, because this is the previous resistance turn support that we have previously identified. So what seems possible is to see this market go and test this zone, load up the longs of institutions, and then for the market to reject this zone to the upside, continuing the weekly uptrend that we have previously identified. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the GBP, we have to keep in mind that if we're looking at the data for the GBP, we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. So if we look at the data for the GBPUSD, we can notice how with the last reports, net positions have already been increased. We went from 47.8k net positions up to 108k net positions, showing a clear increase of the net positioning. So institutions have been moving to the bullish side, increasing their longs from 102k to 160k, and it kind of decreasing their shorts, especially with the last report from 62K to 52K. In fact, with the last report alone, we can see how institutions have closed 9,500 shorts and opened 8,600 longs. So clearly they're starting to load up their longs and close their shorts, already shifting to a more bullish net positioning as we have just seen. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, in a situation like this, if the market will reach the confluence of support zone that we have previously identified, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, rejecting to the upside that confluence of support and completing and continuing the weekly uptrend. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program, the trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.